presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richey. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic long weekend. Yet again, I did not think that we had Monday off. But how about that? I was told by our producer on Friday, let's take a look. I mean, you're not getting a sell-off right now. Yeah, still moving a little bit higher. You gap up today a little bit in the SPY, right? Trading at 602.17. You get the composite trading about 0.62% at 19,752. Dow Jones Industrial up about 1.05% at 43,943. You get a close about that 44,000. Stay pretty strong. You know, you can move back to the highs, basically, right? Taking a look at the Russell as well, up about 1.69%. I am tempted at this point. You know, I was a little bit short the SPX going into I just bought leverage ETFs, but close out of that because that's just not going to work right now. And I'm almost just like the Russell has outperformed, at least the futures here have really outperformed the rest of the indices. And part of me kind of wants to get into maybe like a leverage position for that, at least again, leverage ETF. What I'm looking at is URTY, so it might be something to look into. Trading up 4.89% today, 4.95%, 54.33. Let's see, you got crude oil off about 1.71% at 76.07. Gonna drill some more. There was a stock, I'm not gonna talk much today on kind of what I've been looking at. We have a great lineup for you today with Basil and Tim. But however, you have crude oil futures coming down off about 1.71%, 76.07. You know, increased drilling is going to knock these guys down a lot. Now, looking back at what happened during the first Trump administration, it's kind of hard to draw parallels because you had COVID, right? So you get obviously a lot of drillers going out of business. But you know, there are a lot of different factors playing into that aren't just, you know, drilling more to lower the prices. You have gold contract trading about 0.31% at 2,757. Silver up about 1.15 at $31.50. And then our boy copper actually off today, off about 0.74% at $4.33. Let's go over right now to TFNN.com. I'm going to go over to the newsletters tab. You're going to see right here the opening call newsletter by Basil Chapman. Strongly recommend checking that out. Basil is very thorough kind of analysis throughout the week, and of course has a nice long form video. I believe he said on Friday last week. Additionally, what I always say with this is that there's a fantastic value added, and that is you get access to all of his subscriber webinars. And again, these pop up from time to time. So if you're a subscriber, you get to attend. Very, very much worth the price of the product. Let's move over right now to Basil Chapman. Basil, how are you doing? How was your weekend? Looks like we might not have Basil going right now. That's fine.
I am here.
Basil, how you doing?
I'm doing well. How are you?
Doing well. How is the just quickly? How's the temperature up there? I mean, we're pretty cold in Florida right now.
We are going to be very, very cold. It's in the teens, and in fact, it's going to get colder, and it's getting cold on the very day that I have to get a new heating system. So I'll be out Thursday and Friday out of heat, but I'll manage. Well, I'll figure something out.
We'll send you some blankets or something from Florida, Basil.
Sorry about more than that. I need a hotel.
Well, what are we taking a look at? Looking at the Dow right now, huh?
So let me just do this real quickly to remind everyone. Oh, first of all, thank you for talking about the video, the Friday video. This past Friday, I did a video, and I mentioned it on my show And I'm going to mention it again. It was a video that was really like a webinar that I wanted to do. I just don't, with all the stuff going on, I didn't think I'd have time. So I just turned my usual hour or so video overview for the week on assessing where we are, what we go, how our positions have done, what we're looking at, into something a little broader where there are positions that, in fact, we're starting to put them on today. New positions, and what I'm looking for this first quarter of, at least for January, going to early February 2025. So that's very, so anyone who's signing up, in any case, if you went to a webinar, you would sign up for my newsletter to be able to go into the webinar, because they're usually for subscribers only, free. Yes. But otherwise you pay, and you can have money back guarantee. But most importantly, this was quite an extensive one in great detail. So and one of the things that I just need to show right now for people who are perhaps new to my work, I try to identify the lowest low bar of a move. And then, if I'm correct, there should be higher peaks. I alphabetize the peaks sequentially, uppercase A, B, C, D, E, F, G. I enumerate them. So 1, 2, 3, 4, that fourth highest peak at peak D is where other things can happen. If from the buy signal, it gets upgraded at leg B or just early on to a buy mode, that implies that there should be at least 4 higher peaks. So let me get rid of this right now, and I'll show you what we're doing. So I discussed this with you exactly a week ago, well, a little bit more than a week ago. Last Monday, I said that based on many technical indicators that I have, and one of them was this pink and green downtrend little mini channel. I call it an inside track propellant zone, because every time the price gets there, that's where the price rallies up. In this case, you can see the very long-term resistance. That was the repellent line that gave that turn at the top. So I said a number of, with the VIX index and a number of technical indicators, I got a signal that says to go long on Monday first thing before the opening, to add to our long positions in the Dow, which we've done a kind of an aggressive long at the very low of the Dow. So we're in that position now using that Chapman wave methodology, because this is a leg B and it's much stronger than it was on Friday. And then you've got a technique that shows you a kind of a cup formation. There's a little dashed green line called the Chapman wave inside track repellent zone, and we've just nicked it today. And you've got the pink 9-period moving average going across over the black 14-period moving average green. That's really positive. That started on Friday. You've got the MACD. As the MACD, you see it like the mouth opening. That's really important. That aperture expands. This little gray line right here, this is the daily chart. The gray line is the relative strength starting to come on very strong. And the stochastic, which I upgrade as soon as the stochastic goes over 80%, I can then think of upgrading from a buy signal to a buy mode and put an up arrow at the bottom, which says that there should be at least four higher peaks to come. This is still a leg B. Whatever the high is today, if there is a lower high tomorrow, even by 1 penny, that will make a peak B. If there's a higher high than today's high by 1 penny, it just extends this leg B. It's called a floating ladder, and until we make the peak, it's called a leg B in this case. And the on-balance volume is a little bit weak, and that just says to me it needs to strengthen. And you can see this is very strong. Look at the weekly chart, how we bounced off support. So I like what I'm seeing right now.
Fantastic.
In the Dow.
Basil, please stay right there, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality
is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm joined right now by Basil Chapman. Basil, before we went to the break, we were talking about the Dow, some potential, maybe a buy signal. Who knows?
Yes, and as it stands right now, unless something changes dramatically, I have a buy mode, meaning that there should be higher peaks to come, and that we should get to a peak D. And that's for me a very good sign. I also like the fact that the IWM, which we've been long for quite some time, has had a very nice rally today. It needs to climb over this. Remember, I was talking about this inside track.
Yep.
In this case, it's a repellent zone. It needs to buy next week. What was today? Today's Tuesday. By Friday or Monday, this coming Monday, I'd like to see it actually not just hit, but trading above 232. It's at 229 right now, 396. And that's really important. I've been talking about the S&P 500 in relation to the small caps, the iShares, the Russell 2000. It's very important that you need to see that the Russell's moving very well. You want to see a broad market rally, not just very selective. Very true. I think that some of the tech stocks, the high-tech stocks in the Mag 6 or 7, I think they could slow down a little bit here. That's not too bad. And we're talking about, so the Dow is really a lot. It's kind of the old traditional way of looking at the market. So I'm pleased that that's moving along. And I also like the fact that, so I've spoken to you also about Bitcoin. I said Bitcoin's it was acting poorly and needed quickly to move higher, but that we did have a Bitcoin position with the IBIT, which is the iShares. That's the iShares and the Bitcoin. So we're very fortunate. We got the IBIT at about in the 38s around about the end of October, and here it is at about 60.84, just a hair away from making an all-time high at the 61.75 level. And I have to also look at these cup formations to see that there are many double tops that we've seen that have hit exactly within $1 or so of the previous left side high. But if correct, above 61.75, this should actually be a brand new buy mode in the IBIT. It isn't there yet, but it's very close, and the technicals have really improved. So far, it's very good. And you remember I said there's a relationship for me, the way I'm looking at the markets, between the Bitcoin and Robinhood, and that I really like the action of Robinhood. So we're fortunate we got in the 16s around about the beginning of August at the lows. It's trading right now at 50.23 in a new leg C in the daily, leg E in the weekly, and this is fascinating. The way it broke above the left side candle that I was looking at, that was the candle in September of 2021, immediately after the round number 85 high in August of 2021. It finally got back there, but it's actually trading. This is intra-month. We still got the whole month to finish, but so far it's trading above that candle. If at any point in the next 2 weeks or so, the Robinhood can trade, I'm going to make it a whole day. Usually I say 45 minutes, but it's a monthly chart. So for a whole day above 27, it's, oh, sorry, didn't mean 27. That was a mistake. Above 63, halfway into that long wick of the second month after the IPO, that'll be a really good sign to say that it's on its way to 85. So meantime, the key support for that is between 44 and 42. So, I like the fact that some of the leadership that we saw going into the end of December has continued. That was really important, because for some, in some cases you get a complete change for the new year at different sectors, but there are other sectors that are starting to move. I like that very much. You remember I spoke to you, I think as we were wrapping up the other day, I said the TLT, that's the bonds, that's the iShares, was breaking at that point it had broken the left side support at 87.34, but that the TBT, which is the inverse, it's almost like a mirror image, had actually gone back, was on its way towards the 38.68 area, which was the high back in April. Well, it looks to me like it went, you remember I said some of these double tops in the cup or the V-shaped formation go to within a point of the previous high, and then they take a bit of a breather. Well, look, 38.68, the high of last week with a peak D, remember that peak D is so important, went to 38.98. And now we're pulling back. So I think it'll be quite important in broadening the market if the yields can actually start to come down, and then we can see perhaps stocks like Toll Brothers, Lennar, the home builders start to move up. And that's what I'm saying, that this is really important, that every correction is really a rotational correction. So there's a buoyancy to the overall market, even though you're looking at something pulling back sharply because something else takes its place. It's almost like the dollar is due for a rest right now. Made a peak F at 110.18. Here it is pulling back some. It's only a peak C in the weekly chart, but that daily chart says, yep, it's ready for a pullback. And at the same time, you've got gold moving very much higher. It's very nice to see. It should be testing that high that was made in the continuous contract the week of the 1st of November of 27.61. Oh, sorry, that was the low. The high was 28.20. Am I correct in saying that? Yeah, 28.75. So that's kind of the way I'm looking at the market. And in that video that I did on Friday for subscribers, I discussed stocks that I'm very interested in getting, and some perhaps we missed before. Now's an opportunity on any pullback. So I kind of like what I see. And at some point, I think this early part of the Trump administration. I think we're getting to a point where we're going to get a little overbought, and then there's a sudden rug pull, and that's the one that says, okay, now what's ready for the next section and sectors for the first quarter of 2025. So this is kind of a flurry of activity, and we'll see what is favored and what is unfavored.
Definitely, and I think you saw a little bit of that as well when you had the sell-off maybe like a few weeks ago, maybe a week or 2 weeks ago. You had some of these stocks that were extraordinarily strong, and they've continued to perform very well, even with the kind of indices moving up. And I like what you said as well, right? Like any kind of sell-off is more of like a rotation. And I was noticing that, essentially in the Russell, right? I've been remarking that it's been exceptionally strong compared to the rest of the indices. And I think that still demonstrates that the market itself is somewhat healthy and robust. I mean, you're not getting a bunch of, liquidity coming out of the market and into cash. They're just trying to figure out where to better allocate it. Because that point that you're making refers to what I've been discussing for some time, in the sense that the Russell
and the 500 S&P and the Russell 2000. Completely different animals for a long time.
Yep.
Now we're starting to see some strength. You need to see follow through strength. This is just the start of a move. You need to see some follow through, and it's the same thing if you look at the XLF, which has the money center banks, the real biggies, JP Morgan, etc. Look, beautiful action, and finally you're starting to see, and maybe that's because rates are slipping a little bit, KRE, the regional banks, starting to move. And that to me that's this rotation that I'm talking about. And but in this case, I'd actually like to see the money center banks holding quite well as the regional banks start to come on. And the regional banks, there are a lot of them in the IWM, in the Russell 2000.
Yep.
So that kind of coincides with what you were talking about, yes.
Yeah, absolutely. And having those regionals healthy, I think is an indicator overall of at least the perception of the health of the economy. Basil, thank you so much for joining me. Guys, you've got to get opening call newsletter. Basil, it is always so much appreciated. We'll see you tomorrow morning, 10 a.m.
Thank you, Jacob. Have a good evening.
Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. We are still getting Tim Ord on the line. Of course, I was just joined by Basil Chapman. Strongly recommend checking out the Opening Call newsletter. Again, we have a 30-day money-back guarantee on all first-time subscriptions. Man. I mean, it seems like it's a relatively strong market. And, I mean, you get this further bump. You know, one of my big things is I think some of these... The Magnificent Seven, to some certain extent, is kind of like overbought. The idea that NVIDIA can continue to grow at the level it's been growing at, I think is maybe dubious on the long term. I think more specialized chip developers, like Broadcom, for instance, very much pro-Broadcom right now and anything along those lines. But you just had Trump come out, and this is kind of what I was saying, right? I mean, this goes beyond... you know, certain political beliefs or whatever. This build out of the data center and AI and everything is civilizational at some certain point, right? So you had Trump, this is from Bloomberg, you have Trump to announce a new AI investment push with OpenAI, SoftBank, and Oracle. I mean, it is about $500 billion over the next 4 years. You have Oracle's Larry Ellison, Sam Altman from OpenAI, and Masayoshi Son from SoftBank with $100 billion investment. Of course, you have Oracle moving up. You have NVIDIA moving up. This is it's very strong, you know. And so the idea of getting into everything around chip manufacturing and data center management, that thesis still stands. Of course, we've been speaking about that for quite a while now. We'll probably go over some of those potential equities that could really catch an upside on it. But right now, let's change gears a little bit. Okay, we're gonna go over to the internet, all right? We're gonna go to ord-oracle.com right there in the URL bar. Now, Tim Ord, he joins us every Tuesday and Thursday. Fantastic analysis. I really recommend checking out his website. You can get the newsletter, you get his book, you can see his performance. Additionally, you can go over to TFNN.com, go to the services tab, and we have 2 fantastic webinars from Tim Ord, that is Secret Signs of Market Tops and 6 Secret Ratios Every Trader Should Know. Now, what I'll say is if you're kind of new to Tim's strategy or kind of new to trading in general and looking for different technical analysis that can kind of help you out, I really recommend checking out the 6 Ratios Every Trader Should Know. Very, very important. If you have a little bit of experience under your belt and you're kind of looking just to, you know, increase your skill set, really the Secret Signs of Market Tops is a fantastic one. If you do that, go ahead and send me an email. We're going to get you in there. Tim, how are you doing? Good. A lot of things changed since last week. Haven't they? But actually, you know, it's look at the bigger picture for right now. I think this may change. Yeah. But chart 1, we've been showing this chart. This is kind of the reasons why I've been bearish. But you know, the bottom window, the bottom window is the 21-day average of the ARMS index. Next one higher is the 63-day ARMS index. And both of them are kind of, this is updated to today. Both of them, well, the 21 days basically on the verge, but the 63 days actually still in bearish territory. This is actually can correct itself if the market starts showing panic and the trend closes. Mm-hmm. And that may happen over here over the next 30 days. So this whole thing may change. But right now, it actually still leans bearish. I noted the times. This chart goes back like mid-2017. And I noted the times in pink, shaded pink, where this 6-day trend got below 1. And all of them came at tops. And so we did have a minor top here so far, but you know the question is, will that minor top turn into a big top? Right. And that's why we're kind of trying to define what may happen here over the next 30 days or so. Let's flip to chart 2. Yep. This is just a shorter term chart. You want panic in the market. Panic really is energy, and energy drives the market. And the bottom window is the 3-day trend. The next window up is the 5-day trend. And the next higher window is a 10-day trend. So this is a shorter term view of the trend. The previous chart was the 21-day, 63 days. So that looks at the bigger picture. This looks at the smaller picture. And
anyhow, readings of the 3, 5, and 10-day trend over 1.2 is usually bullish for the market. And I shaded in pink the times when all three of those lined up. And right now, we got the 3-day trend at 109. You got the 5-day trend 107, and you got the 10-day trend at 99. Not real bearish, but it's not bullish. If you get down around 0.9 on these three averages, that'd be bearish. We're kind of in the middle. We're hanging around a little over 1, right around 1.
Right.
So it's not bad, but it's not good. It's not panic. So it's, I'm thinking these charts are actually going to go into the panic range. And I think that may happen over the next couple, 3, 4 weeks, whatever. The reason why, kind of jumping ahead here a little bit, is the Zwag breast thrust indicator. Now, this indicator, actually defining it, is the NYSE advancing issues over NYSE total issues, and you take a 10-day average. And what needs to happen is you need a reading below or at 0.4 or below, then rally to 0.6 or higher with 10 days or less. Well, on January, I forgot what it was, January 10th, I think it was, we hit 0.41. Well, that's not 0.4, but in my opinion, it's close enough. I mean, it's close. And today we're at 0.61 when I made this chart, so we're actually over what we need to be. And this whole thing happened in 6 days. And I think the 6 days is real relevant. If it took, if we had a 0.41 and took 11 days, I don't think this indicator would be that powerful, I guess you might say. But we hit 0.41 to 0.61 in 6 days. To me, that's close enough. And I think we're probably setting at some sort of a low. And actually, I think we've been basing this market for a while. I think actually the decline's over. I think the worst case scenario, I think we'll flip to chart 4 real quick.
Yeah.
I think the worst case scenario is the gap. I have a pink area I noted, and those pink areas are gaps. We're running into a gap right now. We're actually exceeding it. But there's a big gap from about 582 to about 590 or 585 range. And that's a big gap. Normally big gaps get filled. Small gaps a lot of times don't. So I'm thinking at some point we're going to go down and fill these gaps, or at least one of them. And depends on the trend reading on the close, filling those gaps will be the next big signal. So
perfect. Yeah, Tim, please stay right there, folks. We'll be right back with Tim Orton right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting, designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Again, if you want to check out his website, which I strongly recommend, you go to ord-oracle.com. Additionally, we have two fantastic webinars from Tim on our services tab at TFNN.com. Tim, before we went to the break, we were looking essentially at the SPY chart, right? You have a massive gap right around that 582 level. Of course, we're hitting 602 right now. You're anticipating potentially filling that gap, since larger gaps usually get filled, as you were saying.
Right. There's a couple of other things here, too. If you look at the bottom window, that's the VIX. And if you notice, VIX is not hitting a new let's go to the top window again.
Sure.
But on the SPY in late, looks like about December, probably 24th, we were hitting a new high, and today we're above that high. And I drew a red arrow connecting those highs. And if you notice, we're higher now than we were right around that Christmas time. So the S&Ps are hitting a higher high, but the Christmas time, if we go down to the bottom window, and the VIX is making a higher low. In other words, if there was no divergence, the VIX should be making a lower low than the December low. If you know how the VIX works.
Yeah.
So the VIX, there's a divergence here. So the VIX should be hitting a new low below the December low, and it's not doing that, even though the SPY is hitting a higher high above the December high. To show no divergence, the VIX should be making a lower low here, and we're not. So we have a divergence here. So the VIX is actually showing more fear than what happened back in around that December, or around the Christmas time frame. So in other words, you got a divergence in the VIX. And also, if you notice today's volume, I did this a couple hours ago, but volume is extremely light today. And once you hit a new high, you want volume to expand, not to contract. So you got some minor divergences here, but you got a positive ZBT, Zwag Breath Thrust indicator. Mm-hmm. So what that tells me, on the next pullback, you want to buy it, because you got ZBT only shows up in bull markets. So if you're in a bull market, you want to buy the next decline. Well, the next decline, I think, is coming because there's not enough energy in the market today to keep pushing this market higher, because volume's kind of lacking, and you got a negative divergence between the VIX and the SPY. So how far will you pull back? Normally you'll pull back where previous trend readings reach bullish territory. And I noted in blue the times when the trend was near 1.2 or higher. So somewhere between 582 and basically 592 is the support area, and that's the area you want to buy on the next pullback. Because once you start getting panic in the trends, and trend readings only come at panic trend readings only come at lows. You want to buy in the next panic. So probably when you get into that blue area noted on the SPY chart is probably when the trend will start going up again. Because once it starts going in a certain region, once you enter that region again, normally the trend will start to rise again. So I'm thinking somewhere between, at worst case, 582. Best case is 592, which is quite a bit higher. But I think we'll probably fill the gap, get down to 582, and I think that's where the next buy signal will be generated. And I think this whole thing is probably a head and shoulders bottom, where the low back in January 13th, if you can see that low, it kind of gap down, then closed above it, above the previous low. I think that's probably the head of a head and shoulders bottom, and this potential pullback that I think is coming here in the next week or so is probably going to be the right shoulder. That's what I'm thinking. So we'll have to wait and see if that turns out to be true or not. But I think that's a good chance it may be. Then from there, we may go to new highs.
Absolutely.
So.
It's just, it is wild really how resilient this market has been, because I was anticipating, at least, things have changed, of course, right? Hence what we're looking at today. But, I had went just on a short term, just short the SPX, because I totally myself thought we were going to hit that gap again. But it is a strong market. I'm interested to see as well what you got looking at gold today, if you want to move on to that.
All right, we'll take a quick look at that. But the S&Ps, things changed in the market, and you really have to change with them. If you don't, you're going to get buried. Because sometimes things look bullish, and all of a sudden they turn bearish. You got to go with it. But anyhow, let's get back to the gold market. This is the bigger trend again. I keep coming back to this chart because it looks at the bigger trend. So we got a bullish signal. The last signal it got was in January 2021. That was a bearish signal. So the market in general was bearish all the way into I think it was May of this year, and the signals come when you jump above the mid Bollinger Band and both those two indicators at the bottom. The bottom window is the up down volume, next window higher is the advanced decline cumulative, and I put Bollinger Bands on for the signal. So we got a signal basically in May of last year that could be at least a multi-month, if not a multi-year buy signal. And if you notice, both those indicators have turned up on this, on the recent pullback. So these signals are still valid, and they'll still stay valid as long as both those indicators stay above the mid Bollinger Band. So the monthlies are on a buy signal. Let's flip to chart 2. This chart 2 is real interesting. What it is a valuation. The bottom window is the weekly GDX GLD ratio, and when this ratio gets down to 0.145, which it did back, a couple of weeks ago. The previous times when it got that low, it's usually setting at least that short-term low, if not an intermediate-term low. And we hit it, and since then we've turned up. And so valuations wise, gold stocks are cheap compared to gold. And so how high will this chart go? Don't know, but if we probably get up around 2, maybe the valuation may be getting high, but we'll have to wait and see. But anyhow, valuation-wise, gold is cheap compared to, or gold stocks are cheap compared to gold.
Sure.
Let's go to chart, last chart here. This is a short-term chart. It basically keeps you in the trend. There was a sell signal in November, went back to a buy signal, went back to a sell signal, and now we're back to a buy signal. The buy signals are when these two indicators, which the bottom window is the 18-day average of the up-down volume, next window higher is the 18-day average advanced decline. As long as those two indicators stay above -10, it implies GDX is in an uptrend. And if you notice, over the last week or two, or week, maybe 2, they've been above -10, so the uptrend's intact. As long as those two indicators stay above -10, the uptrend should continue. So if you notice, these two indicators hit a higher high above the previous high, where GDX has not hit above its previous high yet. That suggests that GDX will hit above its previous high, which is up around, looks like about 39. So trends up.
Fantastic. Tim, thank you so much. This is why it's always so good having you on Tuesday and Thursday. This market is constantly shifting. It is always good to try to reset and see what's going on. Thank you so much. We're going to see you Thursday, okay, Tim?
Yep, sounds good. We'll see you then. Thank you.
Folks, stay right there. We'll be right back for a short segment right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We have a short segment. We were joined by Basil Chapman and Tim Ord today. Again, certainly recommend checking out the services they have to offer. Of course, for Basil Chapman, you can go to Newsletters tab, get that opening call newsletter, and then for Tim Ord, you can go to the Services tab and get one of his great webinars. Additionally, you go to ord-oracle.com. Quantum's up for some reason. You know, it just looks better and better as time goes on, right? And the more that people discuss, and I'm talking institutional people, I'm talking researchers, discuss quantum, it is so clear that we are not there yet, Now, this still has the potential to get floated, I think, a little bit higher, right, as time goes on, and maybe periodic kind of bumps in it, especially when you have things like Microsoft, which released these big documents saying, hey, now is the year to get ready for quantum, even though everyone that's a researcher or working for these companies says that we're still, quite a few years out. Of course, Microsoft's trying to sell something. You have Amazon's bracket, right, which the computers aren't really even on for those. IBM probably is the most forward advanced, and they're not even that far. So what happens is when you get earnings for these things, right? Like if you're still at 4 billion market cap for Rigetti and you get earnings and you actually, what is it? What is this? -8 cents EPS, and nothing has really materially changed for this company. You plummet with this. I mean, it's the same with Qubit, and Qubit's in a worse situation, as I've said consistently, because it's not a quantum computing company. It is just not. They were trying to pivot into thin film lithium niobate. I don't know what's going on. They were a drink company like 10 years ago. Again, this doesn't have the staying power, and it is amazing to me that you're still getting buys in it. Qubit, less volume, still up 16.84% today. Beware of the quantum. Folks, thank you so much for joining me. We'll be back tomorrow morning, 9 a.m. with Tommy O'Brien for the Morning Market Kickoff. It is a fantastic show. Tune in then. We'll see you then.
Building wealth,